All right, greetings. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com. And do me a favor, if you found value in this video, please like it and also subscribe to the channel. So today is Saturday. So the market is closed. So today is October the 22nd. This is Saturday. So I want to briefly, this video is not going to be long. I want to briefly discuss or kind of give a recap on what took place this past Friday, October the 21st. How I was able to to make some money, man. So when the market opened on Friday, right? So the market opens at 9:30 a.m. Eastern Standard Time. For those who don't know, a lot of folks just don't know. So when the market opened on Friday, it opened at, I'm looking at the website barchart.com here. It opened at 36.57. Right, and so each one of these, so this here is a 5-minute chart. So each one of these candlesticks represents 5 minutes worth of price action. So when the market opened at 9:30 a.m., it got as high as, it opened at 36.57, and it got as high as 36.65. So I'm looking up here, 36.65 within that 5-minute time frame. But subsequently, it went on a major run, and it jumped up to, it got as high as 37.15. So that's roughly what opened at 36.57, and it got as high as 37.15 in roughly 35 minutes, right? That's over a 50, that's a, what, 40, that's a 50 plus point move within the 35-minute time frame. And so based upon my experience, and also I have done, some research going back 20 years, looking at the average move for, in this case, the SPX during a trading session, right? And I have the link to that video in the description below, where you can watch that video where I've done some research on looking at the movement. And so on average, the market, or the SPX, moves about 50 to 60 points per trading session, right? On average. Now, of course, there are days where it's going to move more and it's going to move less, but on average, it moves between 50 and 60 points. So now, considering that, right out the gate, the market moved 50 to 60 points in a short time period, I decided to put on a vertical call credit spread, because a vertical call credit spread benefits from the price of the underlying going down in value. So the reason why I put on a vertical call credit spread, and I put it on at 37.65. So just to give you a visual here, so I put the short strike on at 37.65, meaning I sold the 37.65, right? The reason why I said that's my short strike. And then I bought the 37.70, which is the long strike. So that creates a vertical, what they call a vertical spread. Now, the reason why I selected the 37.65 strike is because, I suspected that the price of the underlying would really run out of steam and basically start to decline in value. And it did, right? And so I decided that, okay, well, it's probably going to trade sideways or stay well below my strike price, my short strike of 37.65 throughout the entire day. And it pretty much did. But then around 12 o'clock, the price started to trend upwards, right? So it started to increase in value. And then later on in the day, some news came out that the Federal Reserve may start to pivot with their interest rate hikes after their meeting in November. And so that was positive news. And so as a result, the market started to increase rather rapidly. So now I'm at 37.65, right? So which is roughly here. So I'm looking here. So So my short strike is at 37.65 and the market was trending up. So around 340 during the day, which is 20 minutes before the market closes, the price got as high as 37.57. Now I started to sweat a little bit because at that point, just to give you a visual, the price of the underlying is roughly, let me change the color on this thing. Yeah, so the price of the underlying SPX is roughly here. And so my short strike is here. So I'm sweating at that point, but it's only 20 minutes left before the market closes. And so I'm staying in the trade. I'm watching it the whole time. And lo and behold, as you can see here, the price begins to do exactly what I wanted it to do, and it started to decline in value. And the market ended up closing at 37.52. So roughly 13 points below my short strike of 37.65. So yeah, I was sweating a little bit, but nevertheless, you know, it worked out. And I was able to walk away with I think $160 on that particular trade. Yeah, $160. However, so I've been trading the SPX 0 DTE, meaning I've been day trading the SPX, which is the index that represents the S&P 500, and the ticker symbol for the S&P 500 is SPX, right? So I've been trading this only for the last, you know, roughly 6 weeks to about 2 months. It's been going extremely well. So as you can see here, thus far, I've made, only trading the SPX, I've made a little over $5,000 just trading the SPX. Now, the reason why I say just trading the SPX, because I do trade other underlines as well. Like RoadQ is one of my favorite underlines to trade, and also Square, SQ, is another underline that I like to trade a lot. And, you know, doing these 0 DTE trades or these day trades is something new for me, you know, because before I was primarily a swing trader. So I would be in a trade for roughly between two weeks to actually a month, you know, prior to venturing into this 0 DTE SPX trading style, if you will. So I think moving forward, the SPX 0 DTE, which is basically me putting on the trade on the SPX the same day that it expires, so 0 DTE, it's going to be my go-to strategy from now on. You know, so it's been working out really well for me, and yeah, so I've been loving it. It feels very good to be in and out of the market on the same day. Right, so again, that's the 0 DTE SPX trading strategy. A lot of folks, you probably have seen some videos on YouTube where other folks are doing the same strategy as well, and they got a different method of actually selecting their strike prices. But nevertheless, the way I've been doing it, it's been working out really well. And so hopefully, again, hopefully you guys, gain some value from this video. Again, definitely give it a like if you have found some value in it, and please consider subscribing to the YouTube channel.